Okay, let's make a start. I think we've got about 50 attendees who've already joined and still um, filling in thick and fast. So hello, good afternoon and welcome to this Social Justice Conference event on solving problem debt in the wake of COVID-19. I'm Joe Shallum, I'm the Head of Financial Inclusion at the CSJ, and it's great to be hosting this discussion today at such a critical juncture for our country. I'd like first of all to say a huge thank you to our audience for zooming in and our fantastic panel, who I'll introduce very shortly. And finally to Lowell for making this event possible today. Now, it's fair to say that debt is very much on the lips of Westminster at the moment, as the national debt has soared to fuel our response to coronavirus. The Chancellor himself promised on Monday to get our borrowing and debt under control. But what about the debts a little closer to home? Some 9 million people were estimated to be over-indebted prior to the pandemic. And arguably COVID-19 has had just as profound implications for household budgets as for the spreadsheets in the Treasury. And so what are those implications? Well, on the one hand, we saw over lockdown records amount repaid on credit cards and personal loans as families saw their spending options rapidly restricted. But this, of course, tells only one side of the story. For the workers hit worst by the crisis and those already struggling to keep their finances afloat, the pandemic pushed many underneath the surface with potentially devastating consequences. By late March, the charity Step Change reported that as many as 1.2 million people had fallen behind on a utility bill payment, 820,000 people behind on council tax, and some 600,000 people behind on rent. Now, the government, to its credit, responded very quickly to these issues, pausing debt repayments within universal credit, suspending in-person enforcement, and actually banning evictions for a period too. But with a potential tsunami of debt still looming on the horizon, we've assembled this all-star panel to shed light on the issues and, I dare say, start to plot a route forward for government. So I'll now introduce them. First, we have the Right Honourable Baroness Morgan of Coates. Baroness Morgan was until quite recently the Secretary of State for Digital, Culture, Media and Sport, and was formerly the chair of the Commons Treasury Select Committee, who many of you will know looked in depth at problem debt in its inquiry into the state of household finances in the UK. Secondly, we have the Right Honourable Lord Pickles. Lord Pickles is a former Secretary of State for Communities and Local Government and is a member of the House of Lords COVID-19 Committee. As an MP and a minister, Lord Pickles was instrumental in the reforms to enforcement under the coalition government, and it's fantastic to have him and his insights today on these issues. Thirdly, we have John Peers, who's UK Managing Director of Lowell. Lowell's one of Europe's largest credit management companies and has really been at the forefront of improving ethical debt collection practices in recent years. And John, I'm sure, will forgive me for saying that he has over 20 years experience in credit management. And finally, can I introduce Joanna Elson, the Chief Executive of the Money Advice Trust. The Money Advice Trust is a fantastic debt advice and money management service whose national debt line last year helped 200,000 people with free personalised support. Joanna also represents vulnerable customers on the board of UK Finance, so a big welcome to Joanna as well. But now a reminder to you, our audience, you have a key role to play in this debate. We want this to be a really interactive discussion, and so please do enter your questions in the Q&A box below our floating heads. We've all been Zooming for some time now, and so presumably this will be easy enough to do. But without any further delay, I'd love to turn to our panel. Each speaker will have about 5 minutes or so to answer our opening question, and then we'll bring in our audience. And so beginning with Lord Pickles, if I may, how do we even begin to solve the problem of problem debt in the wake of coronavirus?
Well, I think we've got to kind of take a step back and see that there are a number of things that actually accelerate people into debt. So I thought, if you wouldn't mind, I'd sort of kind of confine my remarks to a couple of items. One is the use of bailiffs, and the other is council tax debt. Now, when I had some responsibility with this, you briefly referred to it, I increasingly became quite queasy about the use of bailiffs, and as you know, I introduced a number of reforms that we don't actually need to, but essentially it was to pull back on bailiffs' powers. The thing that really surprised me was that before COVID 19 appeared and the effect it has on people's indebtedness, that something rather peculiar was happening with regard to individual debts. That you saw arrangements coming in whereby you saw gradually a reduction of personal indebtedness, credit cards, and the like. For some peculiar reason, you started to see an enormous increase in terms of government debt, money owed to government, in particular to local government. And it does seem to me that some councils, not all councils, some councils have entered into a reasonable way of dealing with debt, have become rather trigger happy with regard to the use of bailiffs. And it's also, there's no logic to it, because the use of bailiffs, most of the money that is collected pays for the bailiff. And we have this sort of ludicrous situation where people can be put into jail for failing to pay council tax debt. And it's almost like sort of stepping back into Dickensian times. We aren't sending them to the Marshalsea, but nevertheless, we are sending people or potentially to prison for not paying debt. And to continue that Victoria analogy a little bit further, one of the great board games that came out of Victorian age was Snakes and Ladders. The very peculiar thing is that if you miss one payment of council tax debt, then you are immediately liable for the whole of the year's payment. So you can find, by the sheer fact that somebody misses one payment, you can push people further and further into debt. And it just strikes me as being rather odd. And the other thing that's rather peculiar about debt management inside local government and government owned is the obsession with receiving payments within one financial year. Now, most other debt management systems has one where it will take it over a period of year and arrive at a reasonable repayment debt. But that is discouraged in terms of the current arrangements with regard to council tax. I made a number of representations to the government with regard to the evictions moratorium. And while a number of reforms came in, I still think we should honour our manifesto commitment that of ending no fault evictions, and looking towards putting the process of debt management pre-action protocols onto a statutory footing, and I think that will make quite a big difference. That's what I'd like to see in terms of the start.
Thanks very much, Lord Pickles. Really interesting points there that I'm sure we'll come back to. I'm going to hand over now to the Right Honourable Baroness Morgan for your opening remarks.
Well, good afternoon, everybody. Joe, thank you for the introduction. It's a pleasure to follow Eric, who, this is the second platform on a totally different subject that I have shared with Eric over conference, and we're also on the House of Lords Committee together as well, which is a great pleasure to serve alongside him. And I want to pay tribute firstly to the CSJ for the spotlight that you have consistently shown on this issue. And I've been working with Joe for a couple of months now on the recent proposals for a debt management bill. You know, Joe, you're an expert on this, and I hope your voice is listened to when we come to debate this more and more in Westminster. Although the title of this session is obviously how do we solve the problem of problem debt in the wake of COVID-19. Sadly, of course, as we all know, problem debt, or rather the issue of over-indebted households, and particularly those most vulnerable in our society, having to, struggling to make ends meet, is not a new one, and that's why the CSJ has shown a light on it. And often it's part of other complicating factors in people's lifestyles, as I'm sure the other speakers know. Certainly as a constituency member of Parliament, I certainly found that people would approach you about one issue, and it might be housing, and then actually you would uncover a series of many challenges in their lives, including over indebtedness or struggling to pay the bills. And that's why the debt advice charity sector is so very important as well. I mean, if we're going to really try to solve this, I mean, obviously the answer, and we'll, I'm sure, come on to some of the shorter term things, but the longer term answer is, of course, to build the financial resilience of those particular individuals and households that we are talking about, recognizing that for some people, that is a real challenge. I'm sure we'll talk about financial education, and again, constituents who frankly just struggled with numbers, and understanding what an annual percentage rate is, or what a good deal is if you're borrowing money, or even thinking ahead to, if I borrow the sum of money, how am I going to repay it? If you are in a state of real need at that moment, and it's a question of whether you keep the heating on or not, then you borrow the money and often have to think about that later, and only then realise that actually I've taken on an unaffordable debt where the interest rate is just going up and up and up. And this government has taken steps to make sure that there are changes in the credit market, crack down on rogue lenders and impossible interest rates. But of course, there's always more to be done. I mean, when I chaired the Treasury Select Committee and we looked at this, at that time, interesting, the savings ratio for the country was obviously quite low. What we've seen over the last 6 months is, of course, a tale of two halves, really. There are those people who have been able to pay off debt, for whom actually the cost of living has gone down because they've been working from home. And so there are some households where the financial situation may be better. But of course, if you look at an overall number like the national savings ratio, it fails to tell a story of those people for whom the outlook is very, very different. And so one of the things that we called for in the Treasury Select Committee report, I was thinking about 2018, was for the Treasury itself to really focus on the true state of household debt, to publish those numbers at a budget, at a financial statement, and then to set out what it was going to do to try to help people build up that financial resilience. And products like Help to Save, for example, are important, as is the auto-enrolment into pension schemes. But we know there are still gaps in that. For example, those who are self-employed. And of course, we've seen in the course of the last 6 months that where the furlough scheme was extraordinarily generous and necessary for people in work who just couldn't work earlier on in the year, we know there are some people who are self-employed who have had a very, very different experience and not been eligible for schemes. And as the labour market changes, and as we have more people who are not employed in full-time work or with one employer, we need to be designing products and support to take account of lots of people's different work situations. I'm sure we'll hear more about affordable credit. I'm really pleased that Eric raised the issue about debt enforcement, and particularly in relation to council tax. It does seem to me that one of the things, and he'll know far more about this than me, the Treasury could do is about changing the rules so that local authorities don't feel they have to chase the debts and recover them in the same financial year. I think that would make a big difference in terms of local authorities' enforcement models. And of course, there's issues around bailiff self-regulation. I was struck again when I was doing the Treasury Select Committee report about the difference in enforcement practices between the private and the public sector. And there must be lessons that can be learned from utility companies, mobile phone companies and others who do still recover the debts. And I don't think we can say local authorities, it's not that they don't need the money, and it's not that they're not legally entitled to the money. But it's a question of how it's enforced and whether you make the situation worse and end up actually recovering nothing because of the way in which you have done it. But I think I go back to resilience. It's about long-term financial education, giving people confidence with numbers, helping people to build up some savings, into products that are simple and understandable, that people are able to have something for when the unexpected strikes, and supporting those who are most vulnerable. And I know in John Glenn there is a minister who is really focused on this, and I hope that he's able in the next budget, and Rishi is able to set out exactly the true state of household debt, so we can start to realise the scale of the problem that we need to fix. Thanks.
Fantastic. Thanks very much, Nikki. Really, really interesting, powerful points there. Thanks for kind words too. John, we're going to move on to you now. It'd be great to have your opening remarks on this subject.
Thanks, Joe. I think I'll repeat, certainly I'm really pleased to be on the panel today. A big thank you to the CSJ for putting together the event and for putting this together with such an esteemed panel as well. So I appreciate that. I think for me, there's a lot of talk around how we prevent the debt. I think certainly where I tend to concentrate, and certainly where my business tends to concentrate, is how we help them through that problem of debt and try and find some resolution for it. I think particularly with COVID at the moment, there's probably 3 areas that I think we still need to address. I think there's more the immediacy of what is the response to the acute issues that COVID has driven, because they have driven a massive uptick in people who are struggling with their debt at the moment, and what adequate forbearance guidance can we give to people to make sure that they're not suffering any detriment here and now. I think there's a broader point, secondly, around the stigma of debt. I really think this is getting in the way of those people being able to access the help they need. And thirdly, and some of the points have already been touched on very well, just that's why the structural and legislation change that's needed, whether that's from a council tax still being a criminal offence if you don't pay it. That is Dickensian, to steal Lord Pickle's phrase. And I think just trying to get a fairer system for all, whether that's the legalese we use when we communicate with customers, or whether it's just the fact that the public debt situation is quite outdated when compared to the private model. And I know from our own customers that we've seen the COVID impact really treble even since May, with illness, reduced hours, furlough, all the common areas that are coming out of this crisis. And we can see that continuing certainly throughout the winter. So I think those existing forbearance options, which were originally put in place to be a bit of a stopgap, a bit of a temporary pause, whilst folks thought that, Corona was probably going to be this sort of 3-month cycle of cessation of activity. Sadly, we know it's here for some time to stay. And I think we need to move away from those short-term facilities to actually look at how do we stop things getting worse. So stopping the interest and fees, making sure we, don't kick the can down the road and just suspend everything with customers, but we work out who's got debt that's now become unaffordable. So I guess I'd like to see a move from that less suppression and delay tactics that we've had, and more on what resolution activity you're actually going to do now with customers to try and solve the situation. Because, the stress on customers, whilst it's a temporary pause, is quite bad. As soon as they see this as a long-term issue for them, and that it is only being suspended, then I think that's causing more anxiety and stopping people from seeking help. I do think the FCA is now moving towards the stance. I think it's getting better and focusing more on activity. But I still think, regardless of these forbearance options that we've got in play, most of them still need the customer to get in touch. And I think that's where this whole issue around destigmatizing debt comes to the fore. People expect to have a bad experience. They expect, that it's embarrassing, that it's painful actually trying to resolve your debt. And I think, there's been loads of study on it. We have a national, attitude that, quite frankly, is just broken when it comes to problem with debt. And all that's going to happen with COVID is we're going to increase the volume of people that are going to be in that position, just afraid to seek out and engage. Now, individual companies, councils and everybody else can do what they can to improve the reputation, that sort of social online trust review type thing that says, actually, we can deal with you in an empathetic way. But because it's such a broader and endemic issue in society, there's still that barrier of people getting into touch. Now, there's been some improvements. Most recently, we've seen money and mental health's activity on letters changing. I think that's a great step forward, but the legalese language in debt letters is still quite prevalent across the board and still attuned back to, ancient legislation. And I think, that needs to change, and government legislation needs to change to enable more digital solutions as well. We've seen a big uptick in people trying to reach out online to try and get help during the COVID crisis. And I think certainly the legal barriers, if you like, in terms of language and the way it's portrayed just doesn't help. I mean, we're still insisting that things go out through letters to customers with reams and reams of legalese. So there's lots we can do to help people talk about it, but I think the third area is just consistency of what happens when you do engage. So that fair treatment, whether you're in a public sector, private sector, what type of debt it is, it shouldn't matter. I think the CSJ's excellent Collect and Dust report clearly called out that the way government debt's collected just needs to change. You know, the 12-month rule, I personally think is ridiculous. We spend all our time trying to personalise and tailor those solutions for customers to make it as flexible as possible. Insisting that whether it's, you know, paying welfare credits back, whether it's, you know, council tax, has to be done within a certain closed cycle. It just tips customers over the edge, because even if they come to arrangements with all their other debt, the massive bills that are coming through, or the enforcement of taking them out of their welfare payments, just means that all those previous affordability assessments go out the door. So I think there's a huge amount we can do there. So I think overall, you know, let's make it easy for people to get it dealt with here and now, and let's not kick the can down the road with people who've got unaffordable debt. I think let's try and reduce the stigma of debt, and I think there's more of a national activity that needs to do to make sure that happens. And I think thirdly, let's just get rid of some of those antiquated rules and legislation that are getting in the way of people getting consistent help. And quite frankly, you know, the amount of worry that's out there at the moment with COVID, what we don't need is, on top of that, us getting in the way of people resolving their debt issues and just adding to that worry.
Thanks so much, John. And yeah, very timely remarks there with the government's announcement just today on changes to debt collection letters. But we'll pass over now to Joanna, our final speaker. Joanna, the floor is yours.
Thank you very much indeed, and good afternoon, everyone. As you've heard, I'm the Chief Executive of the Money Advice Trust. We're the charity that runs National Debtline and Business Debtline. As Joe said, last year, our advisors helped almost 200,000 people by phone and web chat, with 2 million visits to our advice websites. And of course, we work closely with other charities like Citizens Advice and Step Change to provide the best service we can collectively to people who need our help. Now, those figures I quoted were before the enormous economic shock that the coronavirus has caused. And I think we really cannot underestimate the scale of the problem debt challenge that this pandemic is creating. The Money and Pension Service, which is the body that government set up to oversee this area, forecasts that the number of people needing debt advice will climb for at least the next 18 months, increasing by over 60% and peaking around the end of 2021. So here at the Money Advice Trust, we've been recruiting, we're training new advisors, our own and in other charities too, so that together we can help more people, and clearly we're keen to do more. So I thought it might be helpful to give you a bit of a sense of what we're seeing on the front line. And the first thing to say there is that the support put in place so far is helping, in the short term at least. The job retention scheme, the self-employment income support scheme, payment deferrals and pauses on collections activity have all had a significant positive impact. But of course, these are problems delayed rather than problems solved. Support is starting to taper away. Debt collection activities are picking up again, and we're starting to see that come through in our debt advice services. So just as an example, in August, we saw a significant jump in the number of people contacting National Debtline who said that loss of job was the main reason for their financial difficulty. We're also hearing that people are anxious about the future and about what happens at the end of forbearance. So it's a good time, I think, for us to be asking what more can be done. And I think we need action on two broad policy fronts. Firstly, providing safe routes out of debt for people, and secondly, as Nikki said, stopping people getting into difficulty in the first place. So I'm going to say a little about the first and not very much about the second, but I'm sure we can pick up these issues when we get to the discussion. So providing safe routes out of debt for people is clearly vital, and there is some good news on this front, which is that the government's new breathing space scheme, which launches in May next year, will provide people seeking free debt advice with 60 days of protection from interest charges and creditor action. So that should give people the time they need to work with an advisor to deal with their debts, and I'm really pleased that the government is sticking to its timetable on that. A number of us were worried that that might be a casualty of the current crisis. crisis. I think we need to see similar urgency on the other half of this policy, which is the introduction of the new statutory debt repayment plans for people who can afford to pay their creditors some of their repayments, and that obviously will be backed in law for the first time. I gather from a debate in the Lords yesterday that the forthcoming Financial Services Bill will include a clause to give the government the powers they need to bring that into being, and obviously we'll look out for that, and glad to see that that is moving too. Providing safe routes out of debt also means creditors not making the situation worse, and as others have said, the most urgent issue here is reforming government debt collection. I mean, it often comes as a surprise to people, doesn't it? But our advisors on the phones hear it every day, that the least flexible and most harmful debt collection practices are around council tax debts to DWP and HMRC and other government agencies. I won't spend any more time on that because my colleagues on the panel have expertly set out what the issues are there. But we've been pleased to work closely with the CSJ on this area. We recently surveyed debt advisors across the UK to find out what they were hearing on this, and one of them, I think, put it rather well. They said government organisations, quote, tend not to deal with the person, they only deal with the debt, end quote. I think that's really got to change, and that's why we and others are working with colleagues on this panel to call for a government debt management bill to embed fair collection practices across government, for reform of the way council tax is collected, and crucially for independent regulation of the bailiff industry, which I think we all agree is long overdue. Now, everything I've said so far has been about helping people who are already in debt. Clearly, we need to focus on prevention too, and that's a harder part, I think we have to agree, particularly in the current crisis, and it takes us to issues like affordable credit, has been said, the welfare system, fundamental upstream social policy questions around tackling poverty. There's lots to cover there. I can't cover it now, but I look forward to the discussion. Thank you.
Thanks very much, Joanna, and yeah, hopefully we can bring out some of those really key points in the discussion to come. I was going to use my chair's prerogative and ask the first question, but we've had such a flurry in the last few minutes that I think I'm going to jump straight to a question that has come in from Rory Tanner, and I might put this to Lord Pickles because it touches on the points he was making about council debt collection specifically, but also to the panel. Does the panel agree that debt enforcement being a free-to-use service for local authorities further incentivise them to resort to using bailiffs? And therefore, does the panel think that a fee should be introduced for local authorities to use bailiffs? I don't know if Eric might have a first stab at that, and then we'll open it up.
But it's not really free. The local authorities will only pick up something like 25, 27 pence in the pound on the debt. Most of it is just sucked up by the bailiffs, and it really is a road to know. If they're actually wanting to get the money back, use of the bailiffs is probably the worst thing they could do. It will be far more sensible to take a leaf out of the way in which debt is collected elsewhere, and to come to a reasonable repayment zone. I think, as I said in the earlier part of the introduction, we should also remove these terrible booby traps that if you miss one council tax repayment, you are immediately thrown into even greater debt. And colleagues talked about these arcane rules with regard to payment within a year. We talked about Dickens and people being put in prison for it's the only one left where you can be put into prison for actual debt. These arcane rules actually do go back to Victorian times, and it would make enormous sense to be able to spread that over more than 1 year. And we could, I think, adjust the various league tables when we look at the level of collection, something I used to persecute local authorities at on a regular basis. But you then would actually be able to look at the proper level of debt, and we could stop dealing with there being debt and then there's public debt. So you could actually come to quite a reasonable, if people were in trouble, you could come to quite a reasonable arrangement. And then suddenly the when you've got people who can just about cope with the repayment, you get this booby trap of the council tax suddenly plunging them into even dearer levels of debt. And the last thing we want to do is to visit our constituency in the equivalent of the Marshalsea.
Thanks, and that really goes to the point as well that John made about consistency. And actually, you know, you might spend a lot of time trying to work out someone's situation, you know, looking at private sector debts, and then you have a public sector debt come along and it puts it all out of whack. But I'd open up to the panel. I mean, John, perhaps you might have a view on how council specifically can change, and perhaps looking at this from the other end of the argument. You know, people will say, well, councils need to collect what is rightly owed to the taxpayer. Is that not something we should consider?
Yeah, I strongly believe that this is both, right? I actually think you can have a more effective level of council collection if you don't tip people over the edge. And this is about sustainability. If you sit there, understand the individual circumstance of the consumer who sat there with debt, you figure out what they can afford to pay or whether they can at all. Because quite frankly, you can save a lot of public money not chasing debt that is never going to be affordable to repay back. And that's an efficiency. I think the second part is, if it is affordable, generally it's affordable over a much longer term than 12 months. So if you get something that's sustainable, that the customer can sit there and lock into, and that's agreed amongst creditors, and the customer knows what they're doing. Now, you're always going to get some volatility, and you're always going to get some flexibility if they need to miss a payment now and again. But if that's locked in, you'll actually recover more money than you do tipping somebody over the edge and having them spiral into a crisis of inflating fees, bailiff charges, and everything else, which just exacerbates the situation. And then, certainly from what I've seen, you end up not recovering the money in the first place. So I don't think this is an or situation. It's definitely an and, where you can have a better practice through councils and government and actually effectively make sure those repayments come back over the longer term. But it will be a longer term.
Yeah, no, I mean, this is such a key issue. And so I think I'm going to pass on the question to Joanna and then to Nikki, specifically looking at councils, if we can, to return to Rory's question there.
Yeah, thank you very much. I would say that, as others have said, councils need to do what other sectors in the private sector have done, which is to invest in better collection, essentially making it easier for people to repay. Because actually, in my experience, and certainly the people who phone our services, the hundreds of thousands of people who have phoned our services, most of them want to repay their debts. They want to get back on an even keel. And there's a psychological benefit to people and a mental health benefit to people of that. And if I think back to this time last year, I actually did some fringe meetings at the all three-party conferences with the family of a young man who killed himself. And you might have seen the documentary about this. He was somebody who was a courier for a blood firm for the NHS, and he got a traffic fine from a local authority. The bailiffs were caught, cuts a long story short, the bailiffs were called in, the debt escalated enormously, and this young man sadly took his life. He was a teenager, he was just 19 years old, and really shocking. And actually, if you watch the documentary, he and his family wanted to pay the debt back. They were trying to talk to the council and say, can we pay part of it? Can we pay it in instalments? And the bureaucracy let them down. Now, I think there's a real lesson in that for us. You know, most people want to repay. Let's make it easy for them to do so. Thanks.
Thanks, Joanna. Yeah, quite tragic, that story there. I mean, I don't know, Nikki, would you add anything to that on councils?
Well, I would, just picking up Joanna's last point, I mean, people should not have to approach their member of parliament in order to be able to have a dialogue with the council, which, I mean, I don't know about Eric also, but I think most MPs have had experiences of people, as you say, desperately trying to talk to the council about their debt and being unable to do so, hitting a brick wall. So that's just one thing to obviously tackle. But I think at the heart of Rory's question is about the wrong incentives in the system, both for local authorities. So the 12-month rule obviously provides one wrong incentive. I love the idea of Eric persecuting local authorities. I can well believe that. Yes, exactly. But and he knows exactly how to do it effectively as well. But things like league tables can also encourage wrong behaviour. And I know from my time in education. So again, if a council thinks that they're doing well, if they're high up in a league table because they're chasing people, but they're using heavy-handed methods to do it, that's again incentivising the wrong behaviour. And then, of course, the bailiffs themselves often will be incentivised to escalate to more expensive methods of collection more quickly, because that's the way they recover more fees. So, all of that shows this is a complex issue to unpick. It can be unpicked, but you've got to tackle all those different things rather than thinking just one change is going to make a big difference to the system, I think.
Thanks, Nikki. Yeah, I mean, we've touched on things like consistency there, bureaucracy, and getting the incentive structures right in the first place all seem to be coming through is quite important. I've got lots more questions coming in, and questions from both Caitlin and Rosie on something I mentioned in the introduction, and that's about rent. And the government had committed to reforming private tenancies with a forthcoming renters reform bill. It feels like we're at a stage now where there has been a massive rent debt built up. I mean, what are the options for government going forward? What can they do about this? Be really interested in panelists' views on that particular part of this puzzle. Anyone have a particular desire to come in on that point? I'm going to go with Joanna.
Thank you. Just a couple of thoughts on that. Of course, housing costs are some of the biggest costs that people face. And when their income dips, and particularly we run Business Deadline, there are many small businesses, their income has just gone during this period. And so finding the money for their housing just is impossible. So a couple of thoughts, one on rent and one on mortgages. What about a no interest loan scheme to enable tenants to pay off arrears and then repay over time? We've seen that work in other countries. Is that worth a go? On mortgages, we think the government needs to close the gap in the mortgage safety net by reforming support for mortgage interest scheme, which you might remember came about around the time of the credit crisis, so some time ago, because we do need to help prevent a surge in mortgage possessions after the payment holidays come to an end. That could be done by reducing the 39-week wait for payments. Perhaps that could go down to 13 weeks or something like that. And we could increase the mortgage cap, which has been £200,000 for I think more than 11 years now, and those two things would be concrete things that could help. Thanks.
Would anyone else like to come in on rent specifically? Nikki, why don't you come in?
Yeah, I mean, we had the position where there was a moratorium, and my worry really was we extended the moratorium, and I suppose effectively I have, because we've put in a 6 months notice. Is doing that without reform just simply creates another cliff edge to fall off, but a delayed cliff edge. So it does seem to me that we should implement our manifesto commitment for ending no-fault evictions. I think I heard a minister say that would do that under stable economic conditions. Well, whoopee-doo, I don't exactly know when that would be. I've been in public life for a very long time, and I can't remember a single occasion where we would say we were in stable economic conditions. We're either recovering from something or getting ready for something else. So it would be helpful to do that. It would be helpful to a number of the pre-action protocols, voluntary protocols, are pretty good, but I think it would make sense to put those into some kind of statutory form. And I think it would also help is if we start looking at debt in totality, so that we can find that we can put together a scheme for an individual whereby their debt can be paid off in a reasonable manner, of which rent is a part of that. And some people say, "Oh, you're going soft. You're going, people are in debt; they should pay up." Well, actually, if you want your money, if you actually want to come out of this process with some money, this is the way to do it. This is the cheapest way to do it. this is the most efficient way of doing it. This is actually the easiest way of doing it. And you also end up with people who, if it's done well, get out of that cycle of debt, given help to manage their money. And that seems to me to be something, you know, in this deeply caring world that we come out of COVID, we should be able to embrace.
I mean, Nicky, I was really struck there by, you know, the need for stable economic conditions, which, let's be honest, may not well be forthcoming. And equally, the government is incredibly busy, quite rightly, dealing with this crisis. I mean, Nicky, from your perspective and experience in government, you know, is this something that the government can do and get on top of with you know, reforming private tenancies in this country while dealing with rent debt at the same time? Are those two things connected?
Well, I mean, obviously they are connected, and I think Eric is right, which is that if you ever wait for the perfect conditions, you know, they're never going to arrive. I think one of the difficulties, and I've never been an MHCLG minister, is that, but as a constituency MP, every time you start to tackle the private rented sector, there is a lot of noise, both obviously from those who are renting and those who support them, but also from the landlords. Whilst you know, I think you have to be careful about sympathy for landlords, and there are different types of landlords. There are those who are big commercial landlords, and there are those for whom actually the property they're renting out is in fact their own personal financial resilience for their future. But what government has to do, and I think working with local authorities, is to see the whole rented sector, in fact the whole housing sector as a whole. Because if you don't help people to stay in their private rented accommodation, the next place they turn up is the local authority saying, I need to be housed because I cannot, and I've lost my, you know, my private rental arrangement. And so it is in the government's interests to try to get on top of this. But I would agree with Eric, and I think actually one of the questions alludes to this as well, which is we've obviously seen a lot of moratoriums and things in the last 6 months, which was necessary. But I think living with COVID also means restarting some things, but perhaps doing it in a graduated way. So people start to pay their mortgages again, but on the basis, exactly as Joanna suggested, could it be interest only? Or they pay rent, but it's less than it would have been to take account of their job situation. My worry would be if people get used to or are given more time not to pay, actually that just that's storing up more problems for the future and means people can't then get on top of what they finally owe.
That's really interesting. I mean, that touches very directly on a point raised by Kevin Shaw, who says that, you know, with multiple sectors having slowed down or even stopped debt collection activity during the pandemic, he wonders, has this been the right decision for all consumer cohorts? And then asks, how can debt collection activity, you know, among multiple creditors be restarted in a coordinated way? John, I'd be really interested in your take on that, given that you often have a bird's eye view of lots of these different types of debt collection activity from your perspective.
Yeah, I think you know, we look across many different sectors, whether it's financial services, whether it's utilities, you know, whether it's telco. I think by and large, most sectors actually followed the, you know, the FCA and the broader guidance around suspending or toning down or completely changing their model. I mean, there's a lot of firms, and we were one of them, look to do more of an outreach program around just understanding customer circumstances through it and make sure they were pointed to the right advice. We know debt advice agencies were inundated, you know, certainly March, April and through May. But I think the sort of the multi-faceted nature of it is most people owe to more than one person. I don't think we've got a big disconnect in terms of the resumption of that activity. I think it is being more empathetically resumed, if I can call that. I think there is a disconnect in terms of those that have held off completely. And I agree with what's been said about, I just don't think that's the right thing to do, because you're just storing up the problem rather than tackling it. But I do think there's a big problem with having various agencies or various companies dealing with the customer circumstances at the same time other things are suspended or other things are being escalated. So it's the disparity between treatment. But I still think that comes back to the, I guess, lack of parity around approaches, whether it's council, whether it's private sector, or whether it's different types of sectors actually playing in the industry. So I'd rather see more consistent treatment, timed at the same time, because I think it's more effective for customers. Otherwise, they get a very, very mixed message about what's going on.
Yeah, it's becoming very clear that we need to, while we are devising these treatments, they do need to be coordinated at the same time. So you're reducing that disparity between different debt management firms, collectors across the public sector as well. I mean, Joanna, do you want to come in on that point?
If I could, yeah, just briefly. I mean, clearly we want to avoid cliff edges, but I think there's also something about what consumers understand. And I think, the industry and all of us actually can be guilty of using jargon that people don't understand. So we talk about payment holidays. It's not really a holiday because it changes the terms of the relationship. You're going to have to still repay it, and you're probably going to have to repay more and for longer. People just don't understand that. We've had a debate with the FCA, and they've actually now started talking about deferrals rather than payment holidays. But even that, somebody needs to be explaining this stuff to consumers, because otherwise it's too easy to think, well, it's all gone away. And actually, John, just a point of information, interestingly, at the beginning of the lockdown, actually the people contacting debt advisors, the numbers dropped rather than increased. And I think that was A, because people had many other things to be focused on and worried about, and B, because nobody was chasing them actually at that point. And as that starts up again, then the numbers rise. So just some interesting things about how we tackle this going forward, and in particular about how we educate people and encourage them. If they, going with my thesis earlier that people want to repay their debts, how do we get them to the point that they can?
Okay, I'm going to go to some of our audience questions now, which are coming in thick and fast. Really interesting question here from Peter Reynolds, who says that being able to access credit that applicants can actually afford is something that everyone needs at some point in their lives. Has the panel any thoughts on the Australian government's recent approach to try and make credit more accessible? And this is basically in the context of research cited by the Australian government that tells us that when consumers find it more difficult to access regulated credit, there tends to be an increase in illegal lending, adding that this must be a risk post-COVID. Eric, I'm going to turn to you now, because I'd be really interested in your views on that point about access to regulated credit and what the risks are where that isn't the case.
It just illustrates the point. To be able to have access to credit, to be able to the need doesn't go away. So if you can't get through the regulated market, then you're likely to go to the guy in the pub, and the guy in the pub is likely to be connected to organized crime. So we do need to find ways in which people can, on low credit rating, to be able to sensibly be able to be part of a repayment package, and also about way of being able to not only just deal in debt management, but being able to deal with matters relating to people's general financial matters. People get into these kind of debts often by accident, and often they find themselves having to repay the interest, and it gets more and more and more. But that certainly is the case in the unregulated market.
I mean, it's interesting. So the CSJ, in the last few months, we've been carrying out mass sort of focus groups with money advisors across the country to talk to them about this kind of hidden forms of problem debt and illegal money lenders, particularly, and the different guises. I mean, obviously, there is the bloke in the pub, but equally, people that are much less obviously likely to be involved in that sort of behaviour. It's been really striking. I mean, John, how do you perceive the scale of this threat?
I think it's huge, and I think a lot of the things certainly that the Australian government and Josh Frydenberg was trying to do is there was a lot of legacy legislation that just sat on the statute book, similar in the UK, that just needed updating and upgrading. I think interestingly, there was two parts for that. One was going after quite a lot around predatory debt management plans, around making people making it very expensive for them to resolve their debt. And I think, we've still got some instances of that in the UK. They went quite heavy, I believe, I can't remember all the papers, but on borrower responsibility, which I think we've got to be careful of around, introducing things around things like affordability checks, where they say you're okay as a lender just to believe whatever the borrower tells you. And we know if you're in a situation where you're desperate to borrow money, that can be very, very challenging at times. And we know people have overestimated or over declared their income in order to try and get credit. And I think there should be protection that's provided to make sure it's accurate. At the flip side of that rules and that sort of bureaucracy piece of it then sits of who you tip out of access to credit and inclusion. And I think, the points made around illegal money lending are massive at the moment. I think, it's typically phrased as, when you see welfare payments repaid, people say, I need to pay friends and family first. And, it's a real divide around whether they are friends and family, or that's just the codified version of whichever legal money lender they've gone to. I think it is a huge issue. And I think certainly as we, quite rightly have suppressed some of the egregious behaviours in some of the payday lending that we saw over the last decade, was the right thing to do. We've got to be very careful about, we haven't really set up meaningful mechanisms for people on very low incomes and very volatile situations to get access to, I'd say, reasonable credit easily. So I do think we are driving quite a lot of consumers into the arms of that kind of lending that's off the books.
So we've heard a little bit there about the threats that we face by not supporting sufficiently. I'm going to take another question from the audience now and bring Joanna in on this, because Mark Haslam says that we've seen unprecedented support for businesses through cheap emergency loans during the pandemic, many of which are unlikely to be repaid. The OBR is now saying repayment of business loans should be dependent on company revenues bouncing back. Shouldn't the government be now looking at a similar kind of fund for households who've fallen through gaps and who need relief now to get back on their feet? There's a really interesting question there about what is the role for wider kind of taxation or taxpayers' money being used to support those who've fallen back on their feet going forward. Joanna, do you want to have a go at that one?
Yeah, thanks. If I may, I'll just go back to the Australian point just for a minute, because I have to declare an interest as a director of Fair for All Finance, which is the body that government set up to spend dormant accounts monies from the banks. And one of the things we're doing there is working with the Treasury to try to explore trialling a no interest loan scheme, as they do in Australia. So this is where in Australia, there's a charity called Good Shepherd working with one of the big banks in Australia and underwritten by the government to offer loans, no interest loans on the high street to low-income families, and it seems to work very well. And as John and others have said, there is a gap there, and as we've rightly squeezed the high-cost credit, there needs to be something that fills that gap and doesn't send people into the arms of the men with baseball bats. So that was just on that one. On the point about use of taxation to look at where loans can't be repaid. I think a number of people have made the point that you could look at a kind of student loan type thing, system where, we know, don't we, with student loans, that where people are earning the money, then that it's right that they pay it back. If they don't get to a certain threshold, then they don't pay it back, and we as a society absorb that and agree that it's right to do so. So I do think that there is something worth looking at there. At business deadline, we see so many people whose income has just fallen off a cliff, and it's hard to see how any of those people, not any of them, how many of those people will ever be able to repay that money, and we need to find a solution to that. So that's a possibility.
Thanks, Joanna. And I'm gonna move on to another question now from let's go to James. So James Dowling has said, Joanna Elson mentioned breathing space as welcome. Does the panel think that the government also needs to bring forward the statutory debt repayment plan to the timescale that they've now moved to introducing breathing space? I mean, I don't know if either Eric or Nikki has a view on what's feasible, given the government is very busy at the moment in terms of these are big changes potentially. Is it possible, let alone desirable, to bring forward the statutory debt repayment plan to the same timescale? Eric, I'm going to ask you first.
Sorry about that. I was unmuted, but I'm now back. I don't know. I'm really not sure about this. I mean, there is a lot of things to be done. I suspect we don't really have a good feel for what it's going to be like. Would be a bit of a jump in the dark. Wouldn't necessarily rule it out, but I think we need to. There is a need for the government to do a lot of things on debt management, and maybe everything in its own season.
Nikki, would you agree with that?
Well, I mean, I just think that government or parliamentary time is incredibly constrained at the moment. And I would be surprised if government were going to accelerate. I mean, the next big financial moment really, well, we're expecting, I mean, there may well be more stuff about local lockdowns and support for jobs in those areas and everything else. But I think the next overall financial moment will be the budget, which I can't think we're going to see until March of next year. And that might be a moment to pick up quite a lot of the things that have been discussed today. And it would be good to see a sort of holistic package, if I could put it like that, about supporting low income or no income households with money that they are having to, what debt they've had to take on, money that they are, in need of. And just, I mean, the other thought I had, well, was twofold. One of the things is about the use of taxpayers' money and support for businesses. And, government and ministers are making some incredibly difficult choices at the moment, and some really fundamental society affecting choices, if I could put it like that. Do you support business? How do you support employment? And furlough scheme was something that we'd never seen before and was put in place in record time. So were the company loans. And now we hear, of course, that crime and criminals have got involved in the company loan scheme in particular, and I suspect to a certain extent in the furlough scheme, and taken advantage of taxpayer generosity. And so I think in terms of the taxpayer stepping in and giving loans to people outside a sort of the welfare system, may be unlikely, but it does strike me we have a very innovative fintech and banking sector in this country. And whether there is more that could be done there, it's a difficult business model. As we saw with the payday lenders, a lot of them just went out of business because they couldn't make their model work without charging exorbitant rates of interest. But there may be something there. And I think that this government bandwidth being constrained, if the debt sector more broadly is able to perhaps work with fintech and banking sector to come up with some products, I could see this being a chancellor who would very much back that.
Well, that's a very encouraging thought in lots of ways. Well, I'm conscious of time now, so we're going really to go to our final kind of top point from each of the panelists. You'll have about a minute and a half each to make your case for what you think is the most important thing that the government and wider society indeed needs to do to solve problem debt in the wake of this crisis. And I think I'm going to start with Joanna, if that's not too cruel of me, to lead the charge.
No, that's fine. Thank you very much, Joe. It's been great to be part of this panel and, to debate these issues. And, without sparing the panel's blushes, everybody on this panel has been doing their bit in one way or another to move these issues on. We've talked a little bit about government debt. We've talked about bailiffs. I think, we now need a concerted focus there, because we've been waiting for some time now for the government to respond to these issues. And we've had some warm words, and I don't say that in a pejorative way, they're very welcome, but we now need to see some action. So the government restarted or allowed bailiffs to restart their action. We desperately now need the proper regulation, independent regulation of those bailiff firms. That they're now allowed to go in, even in those areas that are in local lockdowns. We hear day in, day out horror stories about families with children, about bailiffs knocking on the door outside the hours they're allowed to do, before 6 o'clock in the morning, after 9 o'clock at night, and so on. We need action there. I'm sure the government knows about it and has the right intention. I know parliamentary time is difficult, but it's an urgent thing that needs to happen soon. Thanks.
Thanks very much, Joanna. I'm going to come on to John now for closing thoughts.
I think certainly in terms of priority, 2 of the 3 areas I think that I touched on earlier. I think firstly, I think we just need a far wider scale debate on how we treat debt and the stigma of it, and why, as a society, people just don't want to talk about it or get help. I think that's a much broader solve. I'm not sure the government can do that in short order. In terms of what could be done in short order, I think, is to progress the debt management bill. I think, given the escalating public debt that's going to be going out there through local councils or through central government, if we make those changes now to align debt collection practices for councils and government, that'll do a huge amount to actually alleviate the stress for millions of people across the country in the coming months. I think the sooner we do that, the sooner we get that in place, the better it will be better off as a nation, full stop.
Thanks very much, John. And Eric, if you might go next in terms of final thoughts on what we need to do.
Yeah, sure. I mean, given that council tax is one of the great accelerators in debt, insofar that it can plunge people into debt very quickly by just missing a simple payment. And given that in order to do the reforms, we need to look in terms of payment over more than 1 year, and given that that would require changes in regulations and legislation, but those kind of things are relatively easy to piggyback on quite a number of bills that the government has without bringing in a special bespoke. I think if we want to tackle debt and to kind of stop this game of snakes and ladders, more particularly snakes, this is the thing we should do, because in terms of parliamentary time, that's actually quite a quick thing to do.
Thanks very much, Eric. And finally, Nikki, your top thoughts on what we need to do next.
I would agree very much with what Eric has just said. I agree with all the panelists, and it's been a great discussion. What strikes me, though, is what we need in the budget is a sort of holistic household or individual debt help package, if I can put it like that, that changes some of the incentives, but also brings forward some of the proposals, potentially, as I say, about working with different providers of debt. One of the other proposals, of course, is from Lord Bird, which is about taking into account people's record on paying rent in terms of their credit records, for example, which will help in terms of the type of debt people might enter into. But also, to say, about really beefing up, I think, and expanding the Help to Save scheme, helping households to build up financial resilience, because it's all very well to address the current issues, very much needed. The stress of debt is unimaginable, but we also have to have an eye on the future, which is how do we help people not to get into this situation or to be able to get out of it quicker in the future.
Wonderful. Well, thank you very much indeed. And thanks to our audience for zooming in and asking some great questions. Conscious that we've run a little bit over time, so apologies for that. But thanks to our fantastic panel for joining us today. The CSJ will be doing lots of work in this space going forward, so do keep an eye on that, and hopefully see you all soon. Thanks very much.
Thank you. Thanks, Jim. Thanks, everyone.
Thanks all.